fee-taking social impact, how can we help you? Now, if you were in my shoes, how would you generate help for Basilwood schools who are base of the line fee-taking but top of the line international schools giving global education to Indian children?
You're asking consultation for free, but I'll try. I think first, I don't think Annadan is disconnected from Vidyadan, because without food in the child's stomach, they're not ready to learn. So I think what Akshay Patra is doing and what the government's midday meal scheme does is a really important component of providing education. Now, coming to your question of, how should you solve this dilemma? We were in this dilemma 10 years back, because when we began our schools are not for profit in India. The big question at that point was, Smita, my co-founder, was running a non-profit called Sparsh, and they used to run Anganwadis in Mumbai. Our big learning was that if the end user is not seeing value enough in your solution to be willing to pay what you're asking for, then you're going to be eternally dependent on a donor. And donor-dependent models, at least that is my personal belief, not many people agree, are not long-term sustainable. For two reasons. One is the donor might change their mind, but the more pernicious reason is that there is always conflict that is built into the connection, because the donor's desire can sometimes be in conflict with the end customer's requirement. So what I have found is that we built LEAD as a social enterprise, which is that it will be for profit, because then I'm not dependent on donors. But it will be designed at a price which my end consumer can pay. And I have to have the intellectual and moral integrity to deliver the quality that I know will improve their life. So the short answer to your long question is that ultimately I think the pricing and the cost have to work in a way which is affordable to your end consumer and can cover the expenses of building a great solution. Some of the schools who are not able to do it actually use the LEAD system, because we have built it for scale. So rather than every school having to spend that money, LEAD spends that money and then defrays it over 10,000 schools. So every school has to pay only a penny. I don't know whether it directly helped, but those are my thoughts. Yes, sir. Yes, if you speak loud enough, I'll be able to hear.
When you said there is a balance between physical and digital, I understand and believe technology is the answer, but that's my understanding and my belief. But whenever we go out, whether it is an IIT Bombay or is it JNTU Hyderabad, there's a strong resistance to technology. It's always physical. Get your teachers here, get your mentors here, get your leaders here, teach them in class, and more of, have the digital element minimal. It could be in forms of assessment or whatever it is, but whether you want someone from Google, Apple, Facebook, Tesla, or you want from Microsoft, Amazon, everybody needs to be here. So when you are designing LEAD and when you are making your future plans for next 5-10 years, I definitely feel technology is the answer. But do you also see this roadblock at school level? That invariably there's a strong resistance to accept technology. A, because people who are leading and running the school don't understand it in the first place. And second, when the kids go back home, be it your school students or my college students, technology means Netflix and Amazon. It doesn't mean Lead Assessment Platform or Cantilever Labs Assessment Platform. So what do you think about technology maybe?
It's a really complicated question to answer in 1 minute, which she's giving me.
I will
but let me just answer
you after this also.
I think for the benefit of the larger audience, I just wanted to make one point that very often when we think of technology in education, we frame technology as a replacement of the teacher or as a way of improving access. I don't think that's the best use of technology in education. The best use of technology in education is to empower the teacher, because left to her own device, a teacher will use her voice, which leads to auditory learning, which leads to then rote learning. I think how technology can empower a teacher is by ensuring learning becomes multimodal. So use all the devices of AR, VR, audio visual, and then personalize through assessments and then remedials. So all research in EdTech across the world has shown that the best use of technology is in empowering teachers and personalizing learning, not in circumventing the teacher. But that's my short answer to your long question. We can, of course, talk later.
Much, Sumit. Ladies and gentlemen, that was the last question. He'll be available at the networking lounge. You can bombard him with all the questions that you have. Sumit, please join us in the middle of the stage. I request Ms. Rakshan from T-Hub to please hand over a token of our gratitude to Mr. Sumit Mehta. Thank you so much. Ladies and gentlemen, coming up next is a fireside chat that I'm sure all of you are going to enjoy a lot. Have you ever wondered how to build a successful board? Whom to have on your board? And how crucial is a board? Let's listen to our panelists and find answers to such clueless questions which only experience and expertise can answer. But before that, there are parallel sessions also going on. So if in case you have registered for any other session, I request you to please move to that room. Any networking can happen in the networking lounge if you have any questions for any of the panelists. Ladies and gentlemen, now for the fireside chat, I invite on stage Ms. Vani Kola, successful entrepreneur in the Silicon Valley and currently the managing director at Kalari, an early stage technology focused venture capital firm. Please put your hands together for Ms. Vani Kola. I also invite on stage Mr. Harsh Jain, CEO and co-founder of Dream 11, India's biggest fantasy sports platform with more than 8 crore users playing fantasy cricket, football, kabaddi, baseball, hockey, volleyball, handball, and baseball. Ladies and gentlemen, please put your hands together for our fireside chat speakers. Thank you.
So with Sumit earlier talking about Mahabharat and Dronacharya and everything, it put something in my mind. There comes a moment where the student surpasses the teacher, and for Drona that was sort of a big moment when he saw Arjuna do that, I suppose. So sitting with Harsh feels like that right now.
Not at all.
Not that I'm the teacher and he's the student, so that's not the metaphor, but there is sometimes where someone truly surpasses all your expectations. So this is just a joyous, very fulfilling moment to have Harsh here. But before we start the session, I don't want to go into long introductions about Harsh because you can read about it. But the topic today, I think is important because a lot of founders struggle in growing their boards and struggle to grow with their boards. As the complexion of your company changes, as you scale your company and you transition from early stage investors to a more broader based investor base, and as the complexity of the kind of people that come on your board, you have to grow. And we have seen so many cases where we read about this conflict, and that can be a value disseminator. And of the, Kalari has funded over 120 companies in the last decade, and I have, prior to that, also been in the startup ecosystem for 2 decades. Of the many people that I've seen, Harsh has done this, I would say, almost close to perfection. His own self-growth, and along with that, how he has managed the evolution and complex board to truly add value to his business. So this is a topic we don't speak enough, so I wanted to speak about that. And 2 more things before that I want to add is, I think part of it is because Harsh is a little bit like an old soul, He, and I say that in a very fond way. I think there's a deep maturity that I saw in him that was always sort of ahead of his years. I think that has allowed him to listen, reflect, and act from a place of reason versus simply a place of emotion. And also when I met Harsha's mother, I said, look, I want to ask you one question I've been meaning to ask you. So I learned, how did you raise such a good person, right? So I think that's a little bit about Harsh. So Harsh, before we talk about boards, I got attracted to you like opposites attract. I'm not a sports person at all, right? And Harsh is all sports. And I learned so much about it from Harsh, from the day I met him sort of in the bylanes of New York, so to speak. But your deep passion for sports has been the impetus to not only start Dream Sports, but today it defines your entrepreneurial journey. So I kind of want to understand how your passion played a role into building this fantastic business that you've built.
Sure. Namaskaram, everyone. Great to be here, and thank you, T-Hub, for having me here. It's a pleasure. Vani has showered too many praises on me. Now she'll get started with the tough questions. But yeah, so I think, would you like to know more about how do we get here, or?
I think how we got here, a lot of people know, but how do you see the opportunity to build sports-based businesses in India, globally, that's there? And, you're on a tear on this, so.
Well, I think, honestly, there's not enough people who are chasing problem solving. I think one of the things that have helped us to scale up and build Dream 11 is that, initially it was a passion project. I love fantasy football, actually, more than fantasy cricket. This started because I'm an EPL fan who plays fantasy football. And then when IPL was launching in 2008, we went looking to play fantasy cricket and there was none. But over the years, once we got product market fit with Dream 11, and that took a while, that took about 5 years to get product market fit, and many pivots and failures and learnings. Once we did that, we've started now growing from just a fantasy sports company to a much larger sports company. And so now we have Dream 11, which does fantasy sports, which is our flagship product. But we also have Fan Code, which does sports content, commentary, stats, and commerce. We have Dream Set Go for sports travel and experiences. We have Dream Game Studios working on sports gaming. We have an investment in Rario, which is doing NFT in sports. We have investments in Elevar, which is sports bats and sneakers. We have investments in Fitter, which does fitness. We have investments in Khelo More, which helps you to play sports in real life. And we have an investment in So Strong, which does esports. The point I'm getting to at all of this is that as a sports culture in India, we have very little in sports. We have the gold standard, world-class Indian men's cricket, which, as you know, sold for the media rights, was the second most expensive in the world. But beyond that, as a sports culture, we haven't really tapped into the potential of the depth of cricket in India, or even the breadth of sports in India, which is kabaddi, football, basketball, and so on. And so really that's our objective of growing now. It's to solve the same problem we've done in fantasy cricket, is to do that much larger in all sports areas in India.
I think the opportunity for sports is immense, and something that is one of those areas that isn't as thought about. And I think you've done such a fantastic job of building that. As I said, I've learned a ton on that from Harsh. But going to this question of boards, there is this notion that board is adversarial to you, and there is always this conflict between sometimes the founder and board. And in the last sort of, close to 9 years or so that I've known you, there has never been a situation where there is a irreparable conflict or emotional trauma that has been caused to each other, right? And I remember fondly the early days, Harsh, where we just met casually in a small room actually, you know, and it's kind of like, sort of the root. So you go back to that with such fondness. And today we have like 11 people, maybe 13 people, 15 people in the boardroom. It's much more formal. But you have made the transition and evolution along with the scale of the company, very seamlessly carrying people along. So what is it that you've learned about managing boards that you can, share with others?
So I think it's been very interesting because Vani led our Series A and our Series B. Those were our first funding rounds. And that was the first time we got a formal board. And it's very interesting as an entrepreneur also to have investors for the first time, because you have someone that now owns part of your company and is fully aligned of making it a much larger success. So yes, they're like advisors, but way more attuned to helping the company grow, and way more incentivized as well, personally, professionally. I think the role of the board changes dramatically as you go from a Series A to, from a single-digit $1 million company to a $1 billion company. Vani and I used to actually talk much more about product, and she was, wearing your earlier product and CEO hat, helping even in terms of what features we should launch, what retention metrics we should look at, what is a good conversion ratio, where should we acquire customers from, how much should we spend on marketing. I think the role of the board was very different initially, which was almost like at that time you don't have a CXO team. You don't have a chief marketing officer and a chief technology officer and a chief blah, blah, blah. You have the founders and your early stage investors. And so between y'all, you are the CXO of everything. And so it was very interesting to have Vani and all our early stage investors actually work with us hands-on in everything earlier, right from, most of our senior hires would actually interview with them before they joined us. Till today, I think now the transition has been much more about having a core business which works, and what else do we do with that? How do we expand that? How do we go to global markets? What kind of investment strategies do we have? We get into mergers and acquisitions. So I think it's much lesser about building the core business, which today is already built, and much more about building the future, expanding, diversifying. And yes, I think that's been the complete transition from an early stage board to a later stage. But I think, like the earlier speaker mentioned, when you're building a company, you're not building the founders. The founders are trying to build an institution that's going to last. And so I think it's very important to take the advice of your board members, not as like a formal board meeting, you have to put down the minutes of meeting and it's a formal once a quarter according to your SHA or SPA. I think it's very important to see them as people that are equally there with the founders to help build the company. And whatever that takes, you have to treat them as equals and as advisors. It can't be like a formal advice that you say yes, yes, yes to the board meeting and then go and do whatever you want anyways. I think that's been the kind of role we've looked at our board playing.
But Harsh, I want to dwell on this topic a little bit more. Whether it's with me or with many of your board members, I've seen you call and say, I have this problem, what's your opinion? That sounds simple, right? But many founders don't necessarily leverage us that way, I can tell you that. It could be for various reasons. You may feel a certain vulnerability about doing that, or you may feel judged for doing that, and whatever the reasons may be. So you have somehow been able to get people to do more work for you, right? So what is it you have learned in managing boards that you would pass on?
I think, first of all, like you said, just be open about your problems, right? Your board is not someone you should be worried about going to problems, saying that, oh, there are investors, they'll get to know some of our problems, they might not invest further. I think it's very important for them to know your problems, to work with you on solutions. In fact, I think that it makes a much deeper bond that allows them to invest further because they feel connected to the company. They feel like they were there with you, working on problems with you, and then solving them. And if they can't solve them, that's okay. But it'll be good because then they won't expect you to solve them. If they can't help you to solve them, then why should you be the one to be able to solve something magically? I think it is very, very important because most entrepreneurs need to look at boards as people that are literally giving you, once they've funded your company and you've diluted for them, they're there giving you free advice. They're there fully available for free. Some of the sharpest minds of the industry are available to you for free. As an entrepreneur, what more can you ask for? So I think it's very important to tap into that resource.
So, Harsha, I'm getting signal that we have 5 minutes to wrap up. So, one question I want to ask you, I know on a sort of formal basis, this is one of the few trips to Hyderabad. And I'm a born Hyderabadi. So, though I, of course, have lived many decades in Bangalore now. But what do you think of the Hyderabad, excuse me, opportunity for startups and also the current funding environment?
So I'll start with the latter part. I think the current funding environment, look, there's upturns and downturns. We've been doing this since 2008. We saw it in 2008. We saw it in 2012. We saw it in 2016. And it was going to happen in 2020, but the government just, globally made sure that they pumped in enough money and they had enough incentives to make sure that this was pushed out. And it's happening now in 2022. There's always going to be upturns and downturns. And most times in upturns, people build valuation. And in downturn, people build value. And I think it's a great time for entrepreneurs to roll up their sleeves and understand that funding is, you're not going to get great valuations. You're not going to get, pre-revenue, pre-idea, $20 million here, I believe in you. But this is the best time to build. I mean, I truly believe that startups shouldn't have that much funding because that's what keeps them hungry and wanting. Today we have a problem of overfunding. On the second point, I think Hyderabad does a great job for technology. It's an amazing technology hub, and the government is clearly investing amazingly in things like this, in the T-Hub, to build that entire ecosystem even further. Anecdotally, I can say that we have almost never been successful in hiring people from Hyderabad, but we've always been successful in losing people to Hyderabad. I think
Is there a Hyderabad office?
I hope so. I hope so. At some point we can have a Hyderabad office as well here. Things like T-Hub help further. And we'd love to work with the government to do more. In South, we only have a Mumbai office today. But yes, absolutely. That would be something that we'd love to do in the future.
So, because we don't have time for a lot of questions, we'll take one question.
Hi, Hi, Vani. Thank you. Really enjoyed the talk. Just curious, as a founder, obviously founder initially, now as a board member and an investor. Clearly, Harsh is doing fabulously well. His company is doing, amazingly well. Of course, there are other companies you have in your portfolio. And the time that you have is obviously limited in a day, right? So many portfolio companies. How do you kind of prioritize, right? Is it like really supporting the growth of companies that are really doing well, or choosing companies that are probably not doing so well, but seeing a lot of promise? As a board member, as an investor, I would love to hear what you thought.
They are probably very deep personal philosophies. I don't know if there's a general answer for everyone. There is this notion that maybe you feed your good companies more. I think that's very short-sighted. All companies will run into trouble, inevitably. And if your role is not to support, support doesn't always have to say, you ask me for money, I give you the money. I don't even give my children that kind of money. Okay? So, support doesn't have to always be only money, right? Of course, money is part of it. So, I think if you don't help founders through their difficult days, I think you should simply be a financial investor. If you're going to, and that's fine too, right? You invest in stock market, you invest in real estate, whatever you invest in. I think an early stage investor somehow have to have that emotional connect into the business. Of course, there is a time and a place where more money is not going to solve the problem. More effort is not going to solve the problem also. So there is a distinction there, but that threshold has to be very high before you give up on a company or give up on a business, right? So I think that you don't operate on that basis, you operate on a need basis. Who needs me and what do they need me for, right? And one of the things, I think there's rarely a founder whose call I don't return within a few hours, if not at least within a day. I can't think of a situation where we haven't done that, regardless of the situation, right? So Harsh, in the last few hours, have you picked up any Telugu?
Not as much as I'd like, but I can say me andariki na best wishes to everybody, and I'll learn more.
All right, thank you so much.
Thank you, everyone.
Thank you so much. We request you to please stay back on the stage. We request Rakshan to please present a small token of our gratitude on behalf of the entire management of T-Hub and the government of Telangana. Thank you so much, Vani. Thank you so much, Harsh. This was a brilliant discussion. Thank you. Ladies and gentlemen, once again a small announcement. If in case you have registered for any other session, the parallel sessions are going on. Kindly check and move towards the networking lounge for networking. We will be moving on to the next panel discussion, which will be with Ms. Shweta Rajpal Kohli and the panel members. So those who have registered for this session, we request you to kindly stay back and take your seats. Order ఏంటి? Such fantastic discussions going on today. So for all the members who have joined in just now for the sessions and they were not here, once again a very warm welcome to all of you. This is the biggest celebration of the spirit of entrepreneurship, the world's largest innovation campus, T-Hub. T-Hub comprises of three components. T-Hub, which is incubation and acceleration hub. T-Works, India's largest prototyping facility, will be coming up shortly right next. And the image, gaming and AR/VR tower, which will also be coming up very shortly. Ladies and gentlemen, T-Hub's primary endeavor is to ensure that entrepreneur is in the middle of everything. That is our primary focus. Moving on, the world is just recovering from the worst hit of the COVID-19 pandemic. It was the most challenging situation the world had ever seen. At the same time, the most challenging time we have overcome and walking towards a better tomorrow. The pandemic hit all areas, sectors, classes, and made the world run unified and united. The global impact is immeasurable, but overcoming and navigating to move on to the right path is a must. Ladies and gentlemen, let's learn how to navigate through such challenges from the panel discussion on navigating choppy waters. I invite on stage Ms. Shweta Rajpal Kohli, Chief Public Policy Officer, Sequoia Capital, India and Southeast Asia, to take over as the moderator of this session. Let's give her a huge round of applause. Welcome, ma'am. I now invite the panelists on the stage, Mr. Vishesh Rajaram, Managing Partner, Special Invest. Mr. Mayank Kumar, co-founder and MD of Upgrad. And Mr. Anant Vidurpuri, partner, Bessemer Venture Partners. I now hand over the session to Ms. Shweta.
Just checking if, yeah. Am I audible now? Thank you so much. An honor and a privilege to be here at T-Hub and discussing a topic that is clearly on everyone's minds right now, navigating choppy waters. We know that the first half of this year is now coming to a close, and I think one thing that everyone will agree on, at least, is that how different 2022 has been from 2021, and who could have imagined this year would bring with it tons of uncertainty, some worrying trends around macroeconomic indicators around the world, geopolitical, strife that we've seen that has had an impact on the economy, not just in India, but around the world. And compare it to the kind of exuberance that we saw, say, last year, and, the valuations, the exits. So how different is this year looking? Is this something that is here to stay, or is it just, as Harsh was saying in the previous session, just a downturn cycle that we should be prepared to deal with, because that's exactly how businesses work. There are upturns and there are downturns. And if we are in the midst of a real serious downturn, how do we navigate these choppy waters? So let's get cracking, and let's first try and understand what's really going on with us here. And Anant, let me first get your thoughts on the current environment as far as the startup ecosystem goes. What we're witnessing right now, is this a real downturn? Are you worried?
I'm not worried. I think I will totally, I think it's like when you go to a party, you tend to eat a lot sometimes, and then, your stomach hurts. But that's okay, because you ate a lot. So I think that's the same thing. I think there was a lot of exuberance last year, which some of it was maybe not fully warranted. And today, people are probably, it's like a pendulum, it's kind of gone to the other side, and people are very, very worried. But if you're a founder and, what really matters is, what's the product you're building, are your customers paying for it? And your customers are the most important thing. So we don't look at valuation as much. I wouldn't, worry about multiples, valuations, all that. I would just focus on your customers. And customers are still using software, customers are still buying products. And I don't think that's going to change in the long term. So I wouldn't be worried.
All right, so that's a very optimistic view coming from Anant, saying he's not worried. There is real value in businesses. And there is, if I understand you correctly, you're saying that there was too much hype around the exuberance that we saw last year, and then there is too much noise now around the downturn, and we should just discount some of that and founders should continue to put their heads down and continue building their businesses. But Vishesh, let's go a little deeper into trying to understand what's going on, because let's at least look at, say, the way public markets are reacting. Now, many would say that is an indicator of what's going on in the real economy in some ways. And let's also accept the fact that while the pandemic did not turn out to be as bad as what most people had expected, we're possibly seeing now after effects of that, and the kind of fiscal and monetary stimulus that governments provided is something they can't continue to do. So what we're seeing now on the ground is real worry around, say, interest rates, around inflation, around the impact that all of that, supply chains impacted because of rising fuel prices around the world. And all of that will play out on real businesses. And it's time for us to get real about how some of this will impact startups as well.
I think they're all excellent points. Clearly, clearly COVID coming in led for different governments and different policymakers to take steps that could address problems that were then immediate, right? That led to capital being more easily available, interest costs being low, and that is only going to last for some time. And when you started sort of seeing the end of it and people are sort of coming back and businesses are normalizing, a lot of those have sort of tapered out. And what that's, of course, led in the, a mix of that is possibly led for, one, inflation, and two, cost of capital has gone up.
Yeah.
And I think the big impact of cost of capital going up is a reflection of assets being repriced, or public market multiples being repriced, or companies being repriced, right? And that will definitely have its ripple effect on how assets gets priced. But just like Anand, I'm an optimist, and I think while the pricing of these assets are changing and are getting influenced by what's happening in other parts of the world and in public markets in India, fundamental businesses remain unchanged. They aren't disappearing, or they're not going away. A lot of these companies have true customers, they're consuming, they're buying. The rate at which they're buying may change, and some of that has to do with just capital availability and flow. But the need itself is very foundationally strong, and that isn't going away. So then, as investors and as founders and as ecosystem builders, you possibly have to step back and say, these are businesses that you will build. These are businesses that you will build, but how you price them and how quickly you want to grow, you possibly have to be a little circumspect about that in the environment. But that aside, they're all businesses that will be there and will flourish and do very well.
Actually focus on one sector, which has been the focus in more ways than one, EdTech, Mayank. And it's a sector that you operate in, and it's seen absolutely fascinating growth during the pandemic. And many would say that there are decades when nothing happens, and there are weeks when decades happen, and that's perhaps the kind of focus that EdTech saw during the pandemic, and rightly so. It found its rightful place, and while the trigger was the pandemic, it was clearly a trend that was waiting to take off. Share with us how a sector like EdTech would cope with a downturn cycle that we're seeing right now.
No, I think just 2 days back I was saying in the last 24 hours, but I can tell you that just in one single day, I got 2 founders in education who said, I'm shutting down my shops because it's not working out. So for all the positivity, there is a little bit of gloom and doom where we are seeing companies not being able to scale and funding being a constraint. But if you actually look at Shweta, this is a question that I think I've been answering for the last 2 weeks. Every day somebody is asking exactly the same question. But when I'm talking about EdTech, let me just talk about K through 12 first, sure. Because that's one sector that has seen a big sort of shift happening. So what happened during pandemic was a lot of offline institutions shut down, and therefore a lot of demand that was going offline moved online. Yeah. And a lot of companies also invested aggressively on marketing. So there was a double impact. There was a vacuum and there was a marketing impact, and everything went up to the hilt. But today, with offline opening up and capital again coming into question, we are seeing some demand moving out of EdTech. So there is a growth impact for sure. Yeah. But the capital that one was floating into the sector for driving growth is now getting questioned that is this real growth or not. So what I do see right now happening, at least in some of the tuition sectors or some of the other sectors, is that you will see an impact where growth will get impacted, and a lot of experiments, so-called experiments, expensive experiments that some founders were running, they will start slowing down. But it's all for the right reasons. While I agree with both my panelists that when they said that, look, there's a capital that will move out, but customer demand is there. But as a founder, that amount of experiments and amount of new initiatives that one could end up taking will come down certainly. So the first impact is going to be that those experiments will come down, things will look much more saner. But if you see EdTech, a large portion of the growth was driven by a very strong, aggressive sales team. And that sales ecosystem from a unit economics doesn't make that much sense if your ARPUs are not very high.
Yeah.
And I'm just talking about across the sector, whether it is K through 12, higher education, working professional, every sector is very largely sales driven. So you will see a lot of impact coming in where sales specifically will get impacted and companies will start looking for other means and ways in which they can reach out to the customer. But I agree to, both of them said when they said that they are optimists because market exists. If it's 1% penetration, it will go to 2% penetration. But the journey may be slightly more saner than what it was in the last 2 years.
Right, I like the term saner because I think somewhere everyone agrees that what happens when access to capital is so easy and capital is so freely available is what you see is perhaps a marketplace and an ecosystem that's not real, that's not sane if I were to use Mayank's words. So are we getting into now a phase that is more real? And is this crisis also an opportunity to redefine, to realign your priorities, to actually build real value and to quote what Harsh was saying in the previous session, focus away from valuations to value, you know, and what happens in an upturn is the valuation, what happens in a downturn is you build value. You know, I've just got a request that we need to wrap up this session by 1:15, so I'm going to jump straight into now getting solutions and advice from our panelists on how to navigate the crisis. What is the one advice you'd want to give to founders, you know, Mayank founders like yourself, Anant and Vishesh, founders who you would interact with on what is the prescription of the current downturn? Do you have any timelines on when we're going to see this crisis, you know, this sort of road to recovery move into real recovery? How long this downturn will last? And what would you advise founders on realigning their priorities, on belt tightening, on reassessing and building that value? Vishesh, let me start with you first.
Yeah, so I think of the downturn more as just you know, growth recalibration, if I can call that.
Yeah.
Yeah, it sounds a little more positive for me. But I think Mayank sort of gave the cue to that. I think the most important thing we're suggesting to our founders is treat the capital to be more expensive than it was before. Do your experiments, but be very measurable on outcomes, and you know, be very circumspect about where capital gets allocated, and let's only go after things that are a little more predictable. And I think that the window of time possibly is about 6 to 8 quarters in my mind. And I think that's the bound of time the entire ecosystem is going to readjust itself for, you know, the sort of growth the industries can offer, and how you want to price your capital or reprice your capital.
But there'll be a lot of pain during these 6 to 8 quarters. Can we expect? So, you know, obviously, as Anant would say, there's a lot of noise that you hear in the media, and then there's layoffs, and then there's cost cutting, and there's. So, are we going to see that pain pan out and it'll get worse before it gets better?
I think the important part to realize is that the startup, the venture, the investing ecosystem in India is fairly sizable.
Yeah.
So you will have some pain for sure.
Right.
And the pain is going to be more visible in the large companies that have gone out and you know, made those large marketing or growth or investments anticipating growth, which may not work to plan, and that's why you're going to see a lot more pain. The short answer is yes, there will be pain, and there's no other way to readjust that growth and readjust those asset prices. But I think, you know, if you step back and look at this industry as, you know, an industry with cycles of 10, 15, 20 years, then you're going to see this every 8, 10 years. We saw this in 2008, we saw this in 2000 for various reasons. But in the ecosystem, you're going to see some of these shocks every 8, 10 years. You just have to learn to keep moving from there. Yes,
yeah. And the question clearly remains how deep will that shock be this time around? I think that's something that most people are trying to. It's hard to predict these things, but try and make an assessment of, yes, there is shock. How deep is it? How bad is it?
I think it will be deep. A few will lose and will lose heavy. But the brighter side is that there's still a lot of opportunity and growth ahead.
Right. Mayank, your advice to every founder who comes to you and says, you know what, I may shut down my business.
No, the best part that I've seen is that my unit economics in the month of January, then April, and then June is fundamentally different. And the good part, I mean, Shweta, as you said that, look, all of us believe that the market is there, but because of what the situation's out there and the narrative that's there, and you always remember that at the back of the mind, look, capital is going to be difficult to get. A lot of decisions that were pending have got accelerated. What happened in 1 week, for a decade, it's now happening in 1 month. what would have taken me personally 5 years to execute. Some secrets that I'll just spill out right now. We cut down our marketing spend by half, nothing happened to revenues. And this is not just me, but I can talk about 5 other founders who came and told me.
MC, this
Yeah,
can
so,
be.
but this is very prescriptive and very interesting data point coming from you. So you're saying that, you know, probably we were spending way more than required.
Way more than required, and the same customers are coming from your own customers who are calling back and saying, okay, the product is good and they will buy it. But, and this I'm just telling you, Shweta, this is for across multiple companies. They have come and told me exactly the same thing.
And across sectors, I guess.
Across sector, half the spend, nothing happens on revenue. Certain things that you as founder, anyone as founder would be doing as sort of large scale experiments, you go back to the basics and bare bones and the experiment still works. And you come out of that thinking that, look, I don't need 15 people to run this, I can do it with 2 people. And I guess the brighter side, as you said, Vishal, was that when you are pushed against the wall, you will come out with much brighter ideas. The ideas that you would be afraid of taking earlier, today you can take it because unfortunately the best ideas come when you don't have an option.
Yeah.
And if you do not have an option, you will come out with the best ideas for running your own venture.
Interesting. Anand, your thoughts there?
It's hard to follow that, to be honest. Mayank, I think he said pretty much everything that is really important for founders, and I think I'll just maybe, try to not, say the same things again, but I think it was just a resource allocation issue. There was a lot of capital available, so people threw capital at every problem. And like Mayank said, I wouldn't actually recalibrate growth. I will, and we've had these conversations in our portfolio. I would not ask any founder to recalibrate growth. I would ask them to do what Mayank said. Hey, this is the growth target and you now have half the money to do it. So do it. And that's where founders earn their equity. That's where founders, become like, that's where, there's that saying that you polish the diamond in the rough or something like that. I know it in Hindi, I don't know it in English. But, but that's what's going to happen. You had too much of a resource, now it's less, so you figure it out.
But Anand, is there going to be a premium and focus on profitability and better margins like never before? Like, is there going to be pressure from investors to founders saying, you know what, you've got to turn profitable sooner than you had thought?
Yeah, so I'll say something which is a little provocative here. I think long-term investors who've been in the ecosystem for decades, they will not change the way that they were investing. They will invest the exact same way, and they didn't change the way they invested last year or 2 years before as well. I think folks who haven't seen cycles will swing to the other side. I think, your fundamental unit economics are always important, but putting too much emphasis on growth like people did last year, or putting too much emphasis on your profitability, none of them are good things.
Right.
So, I wouldn't push my companies to, now let's start chasing profitability. No, that doesn't make sense. You're building a venture-backed company which is going to only get to public markets in 7, 10, 12 years. You can't be reacting to knee-jerk reactions. You are the longest-term capital in the market.
Yeah. So I think fair point there. And as we wrap up, I do want to ask the three of you one question, and it is that, as you said, that investors who've been there and have seen these up cycles and down cycles would probably brush it off and say, you know what, it's another cycle, and we will get past it, and let's realign priorities, let's do things that are right, and then we'll move over it. There are others who are too early in their journey and may feel the impact of the bumps way more and may feel the shocks a bit more. But as we look back into what happened in the last 2 years, and everyone talks about frothy valuations, or everyone talks about how easily capital was available, is there one lesson? I wouldn't call it regret, because regret's a very strong word, but is there any lesson that emerges from what we saw? And we would say that there is a sudden shift in that mindset as well as in the overall perception. Are there any lessons that we may have learned that should be applied next time around we see that same level of upcycle? Anyone would like to take this first? Anything you do differently?
Well, I guess the part that we all tend to forget from time to time is that equity is expensive.
Yeah.
So you have to sort of handle with care on what you do and how you do what you do. I guess the last 2 years allowed us to temporarily not remember that. And we all thought...
Well, will we forget again is the point? Or do we have to remind ourselves not to forget?
If you look at history, we're quite likely to do that in 6 to 10 years.
Right. Mayank?
I would say same thing. I think equity is precious, and that's something that we saw a different reaction earlier. it would be, it's not sort of something sophisticated. I'll say focus on the fundamentals because everybody has to focus on the fundamentals. But I think one thing that many founders that when they come and talk to me, I just say that look, then don't take the bhir chal, don't try to be part of the herd. There are certain things that you're doing because you're supposed to do that ways. But sometimes don't read certain journals, sometimes don't read certain newspapers, sometimes don't read certain articles because that pushes you to be part of the herd, and staying out of the herd sometimes is a good thing. As Anand said that look, long-term capital guys will not jump in. So sometimes you have to be out of the herd to stay safe and not get hurt in the process.
Right, Anand, lessons?
Yeah, I think, it's the same lesson each time. Greed is bad.
Right.
Like we had found, folks chasing, 300, 400, 500% growth. We had companies getting priced off 5-year forward financials. Like, that's just greed, right? What else is that? Like, you just want to raise capital for the heck of it. So I think the only lesson is, like, when you are in a good time, remember the bad time. Like they say that when you are going through a bad time, everybody prays to God, but when you're having fun, nobody prays to God. So just remember this time, the next time you feel that, it's easy to make money in venture capital.
All right, on that note, we're going to wrap up the session, but it's been short and sweet, but very important takeaways from the three of you on navigating choppy waters that we're seeing right now. Clearly, we are in the midst of a downturn. How long and how painful this downturn is going to be is something that is hard to predict, but there's reasonable indication that the next 6 to 8 quarters are going to be tough, but it's also an opportunity for founders, for companies to actually build real value, to do a bit of belt tightening that was needed, to become more real in building their businesses and finding a way to navigate through these very challenging times. Thank you all for sharing your perspective here. Thank you.
Thank you so much. I request Mr. Kshan to please present a token of our gratitude on behalf of T-Hub and the government of Telangana. Thank you so much to all the panelists and the moderator for a brilliant session. Thank you. Ladies and gentlemen, I now request you all to please join us for lunch at the ground floor. 2 o'clock, we have the winner of Comic Stan Season 1 joining us for a stand-up comedy session at 2 o'clock. We request you to please join us back again. Thank you so much.
Startup, and we're trying to educate the youth on technology. So we're making courses, yes. So we're going to make courses on robotics, AI, machine learning.